There's a couple things we kind of want to remind people of. Like one, federal funds rate has nothing to do with, doesn't directly affect mortgages.
Yeah.
It's trickle down effect. What we're talking about is the rate that banks charge each other to borrow money overnight to
Yep.
meet their federal regulations of liquidity. Like you would do so many loans, you got to have so much in reserves in your bank.
Yeah.
And if you don't, then you just borrow it from another bank at whatever the federal funds rate is, which is about 4.25 to 4.5.
Yeah.
Right now.
And so, what did Powell say as far as indication of the future? And I know he likes to keep a lot of stuff tight and close to the vest, but it seems like he's in this wait and see mode, and he's been in that mode for quite some time.
So he's in a wait and see mode. And there's two mandates of the Federal Reserve. You remember what they are?
Yeah, unemployment. We got to keep people working, got to keep
Right.
most of the people in their jobs, and then inflation is the other thing that they counterbalance it with.
Right. I don't want to say we beat inflation because that's not really true.
Yeah.
But it's trending enough in the right direction and it's not growing. And so, they've basically accomplished that or are darn close at
Yeah.
this point. The unemployment piece is really the big part. And so that's what they're waiting and seeing. They're waiting and seeing what happens to the unemployment rate. Now, do you know how we calculate the unemployment rate?
No, but I'm sure you do.
Basically, we're talking about people who are over 16 years of age.
Okay.
We're going to exclude the armed forces, active armed forces. You're going to exclude anybody who's in jail.
Okay. Makes sense.
Makes sense. Or in a mental institution.
Also makes sense.
Senior living facility. Makes sense.
Yep.
They're not working, right? And so that's the labor force, and you take the percentage of those Americans, and how many of them are not that don't have a job. And we used to think, 5% unemployment is like, oh, yeah, that's terrible. Well, we're at 4.2, and that's actually considered stable at this point.
Yeah.
But now there's another factor in play there, and that we're watching, which is the job growth. There's a natural attrition. People get fired, they quit, they leave, although that's slowing down.
Yeah.
Can you think of maybe why that might be?
I think people don't have the financial freedom to quit at this point in time with, just the amount of credit card debt that's out there. And I know inflation is under control to some degree, but it's not like prices have turned around and gone the other way. It's just like they're not expanding at the rate that it was. So I don't know, does that have something to do with it?
Well, personally, I think, so COVID came, we all went home to work.
Yeah.
Right. And all those people have all now they've moved to different cities. They've bought bigger houses or whatever. They're nowhere near the place they work. And then there's been a serious return to work, movement.
Yeah.
My wife used to work from home all the time, and then it was like 3 days a week, and now you got to be there every day.
Yeah.
Driving to the Galleria. Houston's an hour from Houston, and
I don't envy that.
yeah, she has to deal with that every day. So, but as that's happened, like the silent quitting that was going on,
Yeah.
where people would just quit their job and they would quit working. They'd be
And
still getting a
collect
paycheck.
the paycheck. Yeah.
Yeah, and they'd have some thing they bought on Amazon that would move their mouse every so often, so it looked like they were working.
No kidding.
Oh yeah,
Wow.
absolutely. But as people have returned to work, they can't do that anymore.
Yeah.
Their boss might walk by them at any given time. So that, I think is one of the things that's affected it, is that, people are not doing that. They're not quitting their jobs. They don't have the attitude that they had before where, hey, I can just go get another remote job and not actually have to do anything.
Yeah.
So the labor market is stable. We're not growing the labor market. And we've remained at 4.2, is actually considered pretty good right now.
Now, what unemployment level are they looking for? Is there kind of a benchmark for if it goes above this amount, we would look at a rate cut? Is there like a hard and fast? How does that work?
It's not necessarily a litmus test like, oh, if it goes above this, then they're going to, they're looking at everything. They still do have an eye on the inflation, which, he did acknowledge, Powell did acknowledge that, like, hey, inflation's coming.
Yeah.
Somebody's going to have to pay for all these tariff, increases
Right, sure.
in prices. It just hasn't hit yet. And so down the road, we're going to see some cuts because of that. But also, if you remember last year in 24, there were a few revisions of the unemployment numbers.
Yeah.
And those correspond to the times we got rate cuts.
Right.
Because there was uncertainty there. So, 4% seems to be a good number, because you also got to think, like, of those people that we're talking about, there's a certain number of them that don't want to work.
Yeah.
They don't want to get a job. We aren't excluding, people who are actually physically unable to work.
Right.
So there's a certain percent. You're never going to get zero.
Right.
You're always going to have some percentage, and that's 4. 3 would be great, but that's kind of where we are now. If we see a significant move in that, then all right, now maybe it's time to cut.
Like a move towards 5 or above, something like that.
If it started to move, the labor market breaks, or inflation really starts to take off again, then now it might be time to take action, and that action could be to cut, or if inflation takes off,
to raise. Yeah.
Right.
And I think that's the other part of this that nobody really talks about. It's like, when are cuts coming? When are cuts coming? But Powell keeps talking about, having to pay the bill for these tariffs.
Yeah.
And that's going to come in the form of inflation. And we already have seen what Powell likes to do when we get hit with inflation, is increase the federal funds rate. So do you think there's any risk that we may see rates actually go the wrong way?
I don't really, because I think they're trying to keep the unemployment side of things. That's their top priority now.
Yeah.
The inflation, unless it really went out of sight, okay, then maybe we got to do something about it.
Yeah.
But we're waiting and seeing.
Yeah, sure.
And really, kind of to summarize what Powell said afterwards, and the thing that actually did make a move in the bond market was, he said the words, "We will make a smarter decision if we wait."
Yeah.
It's kind of like, my kids play this game all the time, right? Like, they ask, like, well, can I go do this? Well, let me think about it.
Yeah.
Basically that means I'm going to see how you behave.
We're going to wait and see.
Not having an answer, and if you start harassing the crap out of me, it's going to be no.
Yeah.
But
so is Trump the child in this scenario that's badgering the crap out of Powell, and
him and Bill Pulte, federal, the chairman of HUD, he is, they're both pressuring, and there's pressure from all over, and I
get why they're doing it too. I mean, I get that Trump wants to see that federal funds rate come down. I understand the perspective of him and Powell for sure.
Absolutely, and I gotta respect Powell for standing his ground.
Yeah.
Despite all that pressure, he's standing his ground, and I get it. He's also made pretty clear, like, hey, if there's a move, then we're going to move. We're not going to wait and see. He's even acknowledged that they waited too long to raise.
Yeah.
Back in the day, when all this started, and so he's not he's humble enough to admit, hey, we made a mistake back then. We're not going to do that again.
Yeah.
But we're going to make a smarter decision if we wait and see than if we just jump at it right now.
Back at the end of 2024, everybody was saying 4 or 5 rate cuts in 2025 was likely. Now we've seen just 1 so far this year, right?
Yeah.
Do you think, now people are saying 2 if we're lucky? Do you think we see a rate cut before the end of the year?
I'm thinking we'll see one, and it may not be the next meeting, it's every 6 weeks.
Right, so it would be August or?
Yeah, yeah, exactly. So yeah, middle of June, beginning of August, basically, or end of July. I don't recall the date off the top of my head. But the point is that, when they meet again, maybe, we're going to have to see what's going on, But if not that meeting, the next one, I would think we'll see a cut. It's not going to be a huge cut. It's going to be a quarter point. It's going to be you're not getting a half point cut,
A full point.
Yeah, a full point. Sorry, that's not going to happen. And they are keeping an eye on another thing too, which is, what are other, central banks around the world doing? What's England doing? What's Germany doing? What's, and sometimes that can influence the markets.
Right, sure.
And sometimes that can influence the markets because it actually affects us, or it can influence the markets because that'll give us an insight on what our Federal Reserve might do.
Really
You know,
interesting. Well, I think
it's
that's a
all
good place
fun.
to leave it.
Although I will ask you, what do you think? Do you think we'll see a rate cut this year?
One more.
One
Yeah.
more.
Yeah. And I think it's in the fall, like September or the,
Mhm.
November meeting, something like that. I think, I really do believe that Powell's done a great job at staving off the pressure.
Yeah.
But Trump does like to apply the pressure, and he gets more and more aggressive with how he applies pressure. And I think that if those unemployment numbers come up a bit and Trump continues on with the pressure, because I think he really wants to see a mortgage rate drop before the end of his first year back in office. I think there's going to be some discussion and something's going to be done so that there's a one small rate drop this year in the fall or the winter. That's my prediction.
I think so
From
too.
a real estate agent who knows nothing about the Federal Reserve other than what I've learned from you.
Right. Well, yeah. I agree. I think that's before the end of the year we'll see something.